graduate of Virginia Tech. I've been in the blockchain industry. I actually learned about blockchain shortly after Bitcoin came out, back 2008, 2009 timeframe, because I wanted to create new currencies, a way to create more economic freedom, more monetary freedom. And blockchain happened to be the solution. So that's what got me interested in blockchain. Since then, I've gone on to create several different projects. One of them was a decentralized exchange. So not only can you do currencies on a blockchain, you can implement things like the stock exchanges. Companies can issue shares, and all those things can trade on a blockchain. So I did that with BitShares. But then I went to the other end of the spectrum, and I looked at, can you do social media on a blockchain? And what does that mean? And that's why I created Steemit, also based out of New River Valley. And Steemit was one of the most adopted blockchains, the first blockchain that was so easy to use, people didn't know they were using it. And both of these were some of the fastest blockchains in the market, or the fastest. Then, about 2 years ago, I joined Block One, and we set out to create EOS.io. EOS.io is designed to make blockchain development easier. Block One is now one of the largest blockchain companies. We've got about 100 people around the globe. And we're trying to make blockchain accessible to businesses to solve real-world problems. Now, the early blockchain technologies like Bitcoin, they had trouble scaling. There were limited use cases. They were difficult to use. So trying to address all those different usability issues around blockchain to make it easier for everyone to adopt blockchain. And part of that is to help educate everyone on the true value that blockchain provides to businesses. So we built EOS.io. EOS.io is the fastest general purpose blockchain out there. We got a lot of users, no transaction fees. You can learn more about EOS.io on our website, but the purpose of this talk is not to just talk about our products, but to talk about blockchain more generally. So what you see here is a list of like a fraction of the small businesses that have started up and started building on EOS.io and the EOS blockchain. There is tremendous interest, and everyone is trying to figure out how can they apply blockchain in some new way, build some new business on it. But it's been a very challenging problem because everyone's looking at Bitcoin and Ethereum and EOS, and they're all thinking about tokens. They're all thinking about new business models. When people think about blockchain, they think about public networks and proof of work and wasting energy. None of these things are necessary to achieve value from blockchain. Every single business, if you've got a database and multiple users, your business can be better off on a blockchain. It doesn't need to be public. You can have private blockchains operated entirely by your business. If you've got a database, it should be on a blockchain, and that's where the future of this technology is going. The challenge is a lot of people don't understand what value is there in a private blockchain. Because after all, Bitcoin was created to be this completely decentralized platform, a database for managing money, for transferring tokens from one person to another without any censorship. Well, that is absolutely one use case of blockchain technology, and it shows you the power of the technology. If you were to set up an SQL database using non-blockchain technology and create a token on it and have a little transfer form that allows you to transfer it from one person to the other, that token would have almost no value. You build that exact same system on a blockchain, and you're talking about hundreds of billions of dollars worth of value. And the only difference is the security, the auditability, the accountability of the system. So that's the power blockchain provides in a public, distributed, decentralized manner. But I want to talk about how it applies to every single business you can conceive of. If you've got a business now, or you're going to work for a company after you graduate tech and they're trying to build infrastructure, You need it to be on a blockchain, and there's a lot of reasons why. So, if blockchain is not about tokens, and it's not about being completely decentralized, what value is there in a centralized blockchain? Where in this case, I'm talking about a blockchain managed by a single company. And for this example, I'm going to use Twitter as an example. Why would you want Twitter on a blockchain? Who benefits from putting something like that on a blockchain? Now you can imagine that if you're a CEO or an officer in a publicly traded company, or you're a politician, there are things that you can say that would get not only you in trouble, potentially thrown in jail or fined, but can cause massive movements in stocks, causing people to make or lose a lot of money. Now, imagine for a moment that either an employee inside Twitter or a hacker who finds some hole into their servers, logs in, modifies someone like Elon Musk's account to make some statement that is a violation of SEC regulations. You're in a major predicament because Elon can't prove he didn't say it, and Twitter can't prove that he did. Now, if it was on a blockchain, now Twitter could prove that they didn't say it, and Elon would be forced to prove that he was hacked. It sort of shifts the burden. What's worse, Twitter today would be unable to do anything. Trump or Elon or any of these people that are using these platforms, they're at the mercy of the security of these platforms, Twitter, because there's nothing they can do on their end to secure it. Because you have to rely on the servers, you're logging in with a password. But with blockchain, you're in control of your own security. You can use your cell phone with things like Secure Enclave to manage your private key protected by your fingerprint or your face. And now, if someone like you're a CEO of a publicly traded company and you don't want to get thrown in jail because someone hacked your social media account, not through your computer but through their servers, now you can actually protect yourself. And if you're a company, you can also mitigate your liability. You can avoid costly court battles trying to prove, who said what. And that's a tremendous value for everyone involved. So if that applies to, that's one area where it provides increased security because you now can audit every single action. So I'm going to get a little bit technical here, but hopefully not too technical for this audience. You can imagine you've got your server room and you got a security guard. The security guard checks your ID when you enter the server room. Then you're allowed to go in and you can modify the databases to be whatever you want, and then you leave. At any time, someone could come in the server room through the back door, change those records, but no one could prove that you did the right thing, that the security guard actually checked your ID. You've probably heard of things like multi-factor authentication. You secure your account by not only logging in with your password, but they send you a text message or some other app. In all those systems, the server is the one that has to verify that you put the right password in, that you responded with the right code from the text message. But how do you know the server actually did its job? How can you prove to auditors after the fact that you actually did authorize that transfer or that post, or you actually did log those hours in your timekeeping software, or you signed that contract? Those things are not possible with existing client-server architectures. So with a blockchain design, every single action that a user takes when you're on a website, if you're sending a request to the server, that request is signed. That request is then logged in a database that's append only. It means that you're not modifying data, you're adding new data. And that database is not on one server. It's replicated and managed by multiple independent IT members of your team, possibly in different locations. So if Block 1 were to be operating a private blockchain, we'd have servers managed by people in Blacksburg, servers managed by people in Hong Kong, servers managed by people in various other countries. And we know that there's not one IT staff that has the ability to go in and change these things. We know that that transaction was received by all the different servers, that they all signed off on it, and you now have a permanent record. Not only that, as a company, you can either publish your entire blockchain so the entire world can see it, or you can reveal just the hash of your blockchain. That makes a public commitment to the rest of the world that you're not going to go back and change your records. So if you're an accounting firm or a bank or a stockbroker or in any timekeeping businesses for government contracts where they require you to log your hours every single day and not change things after the fact, all of these things you have improved accountability and auditability of exactly what happened. And that just makes everything more efficient. If you're one business and you want to communicate with another business, today you have to have servers that talk back and forth on the back end with API keys and things like that. But with blockchain, you can actually generate cryptographic proof that you transferred something in this bank and this other bank can then do something, or that you posted something on social media, and that can improve and accelerate business-to-business communication. So blockchains help businesses automate compliance with regulations. So as a bank, you need to make sure that different people sign off on transactions in different orders. As a business, you need to make sure that purchases are authorized and travel expenses are logged and all these things. There are lots of rules and regulations that governments pass down that businesses want to implement internally. Blockchains automate all that. Today, when you go and buy stocks through a broker, it can take 3 days for those things to settle, during which time you look at your account and it says you've got negative debt here and positive stuff there just because things haven't settled. Blockchains can settle those things instantaneously. It removes the human element of it. And a lot of the regulations that we deal with in industry today are all about putting in processes to manually try to prevent corruption, internally and externally. Blockchain automates all that, which reduces costs for businesses. So much so that it's my belief that rather than regulations coming out that are going to try to suppress blockchain technology, I believe it's going to be mandated. I believe that companies that don't adopt these standards are going to be like companies that don't secure their infrastructure today and cause losses to their customers. The liability for not using industry standard best practices is potentially huge. So that's why I'm confident that blockchain technology is going to be relatively ubiquitous. It's going to be completely transparent, and no one's going to know they're using it. Because it's not going to be pushed by people directly. It's going to be by businesses. Businesses that are looking for efficiency, security, reduced liability, regulatory compliance. It's going to fundamentally transform every area of our society, from banking to government to voting, you name it. So at Block 1, our goal, so we've got a lot of security challenges that we need to address, not only on the authentication of the user, but preventing social engineering, password phishing. These things can be largely eliminated by moving to some of these technologies. You gotta look at the whole picture, and the blockchain is at the center of it. So with the combination of hardware keys on your phone, blockchain services, and smart contracts, and software that makes sure that the user knows what they're consenting to, we can really eliminate the vast majority of fraud, saving trillions of dollars every single year globally. So our goal at Block 1 is to build software and infrastructure and tools that allow developers to move their applications from existing infrastructure to a blockchain infrastructure provide the same or better experience for end users in terms of usability and at a lower cost. And eventually, developers realize that not only is blockchain a more secure technology, it's actually just a better design pattern for building scalable, maintainable software. And that's because it forces you to think about what the user's doing, to have unidirectional data flow, and follow other best practices so you don't have database corruption wiping out all your users' data. You can always recover the data. So I've talked a lot about security, talked a lot about how it saves money and reduces risk, but it's also just a better architecture for all software. And you'll find that if you study the frameworks put out by Facebook, they're all moving toward this unidirectional data flow, and blockchain just formalizes